What is going on, everyone? Welcome. It is John Salama, CMT here, and Rocco, the Maltese all-time high dog. Big all-time highs today in energy, dividend stocks. A lot of surges being made. It seems like a very quiet day. We'll get to the doc here, but there's to me a lot going on here. Let's get into, of course, everything charts. Hope you are all doing fantastic. If you have a ticker and whatnot, please punch it in. All right, let's go right here. So this is exactly what I'm talking about. I'm gonna go really big here for y'all. All right, so a lot going on today. A big drop in emerging markets led by Japan and South Korea. We'll take a look at it. Big moves. 2.5%. Korea moving much more than that. So we'll look at that move in those markets. While defensive rotation easily visible here at home. Into healthcare, they're buying them, staples and dividend stocks, new all-time highs for energy. My goodness, the SCHD, which is dividend equity, healthcare, also byproduct, a defensive ETF, but also look at that, the IBB. So that's also a form of risk on, and new 52-week lows for the bond ETFs, you name it, LQD, TLT, VCIT, and BND, all on the 52-week low list. Bonds absolutely falling apart. Been saying it, higher forever, not higher for longer. Bonds, of course, go through the floor. Yields go higher. And again, because I wasn't here at the end of last week, went away on a little bit of vacation. The past week, for the past 5 days, trailing week over week, characterized by big 4% drops in Chinese internet. We were looking at KWeb, and if that new support can be the old resistance can be the new support, but a big 4% drop this week, and also the silver miners, but also major talking point with the surge 4% in oil the past week also brought up a 4% energy rally to all-time highs. So that is the talk of the tape. Let's get into SPY and everything that is relevant. All right, should be seeing the dashboard panel. A lot going on a quiet day. So I've been saying we'll look at the tape and everything in a second. So NASDAQ, they're bleeding that out a little bit, down 1.5%. Micron, we've been saying, and I said on JC's show last week, either wake up in love with the semis or they're absolutely in hatred. She loves me not. She loves me not. Today, Micron down 7% with the she loves me not, I guess. So that's the way it's going. NVIDIA down 2%, down back to the area of 220. Meta down 3%, also so striking communications. Again, this is a tech purge today. Japan lower, lots of different parts in the emerging markets lower with rising yields and people dealing with a different way. Intel, I saw it first thing this morning, down 7%. That was a massive driver. AMD also, like I said, absolutely in hatred with the semis today, down 5%. Broadcom, part of that, 3%. SMH down 4.5%. The SOX, one of the leaders, we're also doing a year-over-year recap at the end of this show because I wasn't here on Friday, so down 5.5% in that. And Marvell, my goodness, also really getting bled, down 8%. All right, so right here, right now, live, let's get to SPY. We're at 17 million here at 1:07 p.m. We've been saying low volume, and that's exactly what's happening. The average is crazy now in SPY. That's 20 days trailing 45 million. That's kind of typical of summer. You just see it lower month over month, but still 45 million is very low. We were at 60 just back in May, June, so it's interesting and hard to see. At the same time, all that being said, today we're on pace for about 30 million shares or so. So it's going to feel light, and so you can get big moves due to how thin the market is. And look at from we went through all the single stocks and each major ETFs, so we'll X that out. Here is 9:30. I always care what happens when liquidity enters the room. I know a trader was asking me, what are you doing to get ready for the 23-hour markets or whatever it is that's going on now, that you can be able to trade prediction markets and everything in your sleep. It's wild. But to me, old school person, to me, liquidity enters the room at 9:30 and it leaves at 4. So until things change, of course, now I trade ETFs, which wasn't a thing really before the 90s, and now it's all I trade. So you got to go to where the puck is going. So we'll adjust accordingly. But that's basically what I'm saying. So 9:30 is why I start my technical analysis through the intraday here. Not a strong tape. It started going lower and lower. If you remember, short term here, very short term. This is a 5-day chart. We peaked on the 13th short term at 779. Here from the open at 9:30 a.m. We bottomed at 11 a.m. right around that euro close at 767 spot. VWAP absolutely flatlining at 768 half. We've just gotten above it now, trying to close, and we looks like we're going to. We just closed above at the 1 o'clock hour, 768 half. So that's your level to see for the end of the day. If you want to pay attention to the noise, but I think we're going to be somewhat tethered to that The strength might take it to 769 spot, and that's about it on a thin day. The floor looks to be, it is a weekday overall, looks to be testing 767 spot, but much ado about nothing. Zooming out more importantly as we get away from the noise. So we've been saying more importantly that this part of the run started on, I have marked July 29th. Typically, that is that candle being cute from the absolute low. Let me just see something on another time frame here. Yeah, so I counted from the 30th. I don't like to be that absolute cute. So you go from the rising day, the first close after that negative day, essentially, and then you begin that rally. 15-ish days, give or take. Obviously, today's the 18th of August. And look at that. The peak actually came on the 13th. It can give a little wiggle inside and out. And now it looks like, wow, the market got exhausted. It just rings a bell. You get an exclamation point. That's what it looks like there. And now we're coming off a little bit. Interesting level today. The VWAP 774 right here live I have actually on the day today. So 760. I'm sorry, the cursor's bouncing. 768.60 is where we are. You have that doji due to the high of the day being near 770 and the low 767. So we're just trying to hold serve essentially. All I've been saying is that our peak was coming around the 15th, and then you're going to have a bearish distribution phase begin there around ending August 30th, Labor Day, September 7th this year. What I'm saying is what you're going to have is a mean reversion towards roughly the 21-day exponential moving average, which is 762 or $6 from where we are today, inside of 1%, absolutely healthy. And you're going to get very light volume to the downside because no one wants to participate in selling this all-time high market that just did it 5 days ago. Also note the strength in the RSI, yes, coming off, still at a 57 here. So you have some momentum. It's coming lower. We've been having negative closes each day since the 13th. So again, I'm seeing some shedding into that mega growth tech. Obviously, you've seen it take a look lower. We'll take a look at every relevant chart on the day, week, and year in the next probably 30, 40 minutes. And we'll see, what we're trading. Look at the Rise 200 day as well on the spot of a SPY 706. So again, I'm seeing mean reversion towards that 762 level over the next 2-ish weeks, ending right before Labor Day. Then I expect the volume to slowly crawl in when the traders get back from the beach, and we'll be making a move ultimately towards mid to end September around 785 or so, making a move towards that, and that would be new all-time highs by about 1%, but that's for mid to late August. That'd probably be hopefully the end of the war for sure. But the market has absolutely taken a leg higher since that leg of the rally, July 30th, and then ultimately again this massive breakout from the former highs in early June that happened August 4th. So a lot of strength in the past 2 weeks, and we rang a bell recently. Let's talk about what is going on exactly right hither. Let's see if we use that properly. So yeah, when the time comes, 762, we'll take a look at trades to be made. I absolutely seeing the defensive rotation I talked about in the beginning. They're buying healthcare, energy all-time highs, obviously correlated with the jump in oil. But strategies for the S&P, I mean, it's a little bit spicy, but I guess you could sell, maybe not even spicy, but you could sell the August expires this Friday, so it's very, very low. I like to go at least 3 weeks out, really collect that theta. So basically put on like a Labor Day trade and sell something like the seven, just basically sell strangles. We're just selling vol on the S&P, and you can sell something like 785 and something like the 755, something like that, 760, maybe 757 strangle or on that, and just collect vol. As really it's going to be quiet, probably settles right here around 50 RSI, sets a neutrality right there, 21 exponential, still have rising momentum, and then we start making that move. Very, very, very logical, barring some unforeseen circumstance, which is a favorite of Larry David and the Seinfeld show, because anything can always happen out of left field. Of course, that's what we brace for as investors, traders, and human beings. What are they buying? Number one, Sigma move today. Absolutely one killer in all the land. Let's see if trades pop out. Oh my, look at that candle. Healthcare up 1.6%. I don't know what you're listening to or watching, but they should be talking about new all-time highs in healthcare right here, right now. Let's zoom out. Is it a new all-time high? Yep. Look at that candle. What a move. This one really several times. Look at the beautiful resets. What you're seeing the market to overall bounce to a 50 RSI, get healthy. That's us at the 200-day moving average right there in mid-June, when folks kind of softly exited or took massive profits in June. Folks thought we're really seeing a breakdown. It was really strengthening after a long basing period after this 160 breakout. And it didn't take, look at the rejection here, 166 on July 7th, right after America's big 250th birthday party, sloppy looking W. Got right back there again to 160, it breached at 157, and then finally did it with some gusto here, 166. And now what we continue to talk about is your new, almost like in life, you want your what you can't do is what you can do every day. Start with a hard every single morning. Same thing. You want your old floor to be your your old ceiling to be your new floor, and that's what exactly happened at what just 2 weeks ago, 2.5 weeks ago in healthcare here, 160. What happens? It goes to 170 today. Today's VWAP is 169.20. They said mine. I think they're getting a little bit long in the tooth. I love buying if you can get close to 165 even. Obviously, it surged by $4 here. My target is 171, honestly. So I think it has about another $1 to go. It's a breakout system. Of course, you're getting a little bit of a bearish divergence in that you can't even scratch 67 RSI. So we'll see how real the momentum is. But the RSI is, the VWAP is being bought on the day, albeit low volume, but still. And finally, green candle. This one's been being beaten down for the past 5 days. So this one's really surging from the 166 floor that you had yesterday. You could chase, always the November 171 calls and sell, this Friday against subsidized. This thing was going high. Alternatively, you can sell the this Friday 165 puts on that guy. So a couple trades in healthcare. All right, consumer staples. Let's look at this. More defensive movement and rotation. Absolutely healthy in an all-time bull market. They're not saying, let me sell, everything. Obviously, tech is coming off, but it's still very, very orderly when I looked at the largest Sigma movers of the day and week over week and year over year movers. So staples moved in February 17th. This is before anyone could even spell Iran. Obviously I don't have a lot of respect for spelling, I guess, for spellers of people. So it peaked at $90 here. Look at the beautiful test here of a VWAP at $81 all throughout the war. Right after here is the ceasefire. That's why you saw this come off here. And a beautiful surge here. Again, look at the rejection here at $87. Couldn't really do it. A very sharp candle on July 28th to $89. And here we are at $86 in legitimately consumer staples. I think you buy break. So, still very constructive. There's a lot of worth things you can own than staples. Like that's not a single close under the 200 moving average since mid-January. Although the problem we're issuing is that it peaked in mid-Feb. But I think breakdowns near 85 spot even should be bought with a short-term ceiling. Honestly, I think this one gets to about 87.5. So, and then it gets the Kembe again. So that's about it. So a couple things you could do. You can sell the 88, 82 September strangle. Respect that it's staples. It's a low vol stock, a $1 ATR on an $86 ETF. So don't expect a ton of payment. Alternatively, you can buy the November. I just always kind of go 3 months out, give yourself a lot of room. You could go October as well. 87 calls. Alternatively, you can also sell, I believe, the 84 September puts or the 85 August puts. That's it for this Friday. So a couple things you could do in staples. Understand though it's low vol. And then the other thing, they're gobbling up dividend equities, new all-time highs. My goodness. We've been talking about this stock. I remember recommending this to, friends and family. Folks asked me about the market. I think, honestly, January, and I was probably, super, not, I don't know, to me, I'm, late in my head. But January 7th, I love the breakout. I love this. I looked at things, obviously, versus above holding 50 RSI, and there's much worse. And this one, EUFN was raging, and we're saying how bad can things be. And again, this is before people could spell Iran and before we had that, capture of Venezuela to start 2026. And look at the RSI surge. So I liked it when it broke out, technically once and for all to begin 2026 here at $28. And here we are at $34 today, all-time high dividend equity stocks. This thing's an absolute crusher. I had said before, this is like one of the ones to own for 2026. If you're all about 3% div yield and you're about super defensive and you need rotation into that, This looks absolutely great. I know it's a breakout system. Again, understand that's a dividend equity ETF. I don't even think the option chains are liquid, but I treat everything as such without it being legit in front of me. So target for this is, 35 even. So we're basically, 1.5% away or so away. Man, when this thing goes green, it goes green for a while. This thing's been green every day except 3 since July 31st. So they've been gobbling this one up since 33 even. I know, again, that's only $1.50 away, but understand this thing is 3% in a year. SPY's about what, 60, 65 bits, something, paltry. We get it because it's giving you 30% year over year, like it's some sort of crack addicted beta ATM. So this is a different part of the market, Pepsi, whatever it's in now, different dividend parts. I don't know what it's in exactly now. And again, this one's at 69 RSI, confirming the strength. Look at this. This one's hitting all-time highs right now as we speak by a nickel. So amazing strength. I don't think it has really liquid calls. We can go October and November, 35 calls, and you would sell the the 35 this week against it if you have it. Alternatively, you could sell those 34 even puts. Probably doesn't exist. Okay, let's talk about what's dragging the pain. The market's overall lower today. So let's talk about the areas of the pain. Boy, are they saying buy Japan. So not Anyang, the opposite. It's not Konnichiwa. Not sure how to say goodbye in Japan. If you know how, type it in. EWJ, the major source of the pain, largest signal mover, down 2.6%. Yes, South Korea has a bigger move. I'm looking at standard deviation movers. This is $1.50 on a $99 stock. EWI is all sorts of degenerate. People over there wake up in the morning and then they get margin called, and then they have their breakfast and then they get margin called. Again, it's just a way of life over there. This Japan, it's a little bit different. Did nothing for 20 years. Now it's breaking out new all-time highs in this puppy about 5 days ago to $99. And boy, it mean reverted down about $4. Also, that's a bearish divergence. RSI can't even get to 67. It lets you know it's a little, when you put the floaty underneath in the lazy river, you can get your butt up there and you let it know that's a little bit thin. So right there, just numbers. If math means, as JC says, if math means anything to you, that move from $99 right there, I'm looking. I say, $95 looks a little bit thin. That cushion between, it can go somewhere between 99 to 95. Where does it go? The low today was 95, and here we are trying to test 96. VWAP, the meaningful number, 96 even. It's below it today. They're saying no, thank you, Japan. To me, exactly what we saw in the S&P. This one rang a bell on the 13th as well at that 99, almost par. And look at it tried the day after 99. No, Dikembe Mutombo. Oh, Rocco got really scared, and me as well. Sorry, and you all, I guess. And then 98, and then the breakdown. Boom, right here, 95 spot. This one goes south for 2 weeks or so towards 95 even, and then it sticks the landing. We're talking about how buoyant and things are or not. And by the way, very meaningful price discovery all the way to that region going back to Valentine's Day. So I think that'll be honestly about it. If you have a massive yield rip, short-term vomit there, and tech like XLK by itself drops 3%, this possibly could go lower somewhere like 92, but I'm not thinking. So what trades do you do? Because kind of counter overall, long-term, beautiful, bullish. This one, by the way, not one close on the 200-day all year. Absolutely love EWJ. Absolute fire, as the kids say. This one's going down to nearly 50 RSI, neutrality point. I bet this one, like I said, for S&P at the beginning, towards that number of 762 of 765 in SPY. This number for EWJ is 95. It basically got there today. Might go 94. I don't think so. Trades, you can likely sell the EWJ, you get some obviously liquidity and optionality. Short, let's go, still Labor Day trades, options trades for now. For the next, going to the end, we'll be going to September 3rd, whatever that Friday is before Labor Day. I'm seeing Iron Maiden on that Sunday. So it's the 6th, 5th, 4th. That's why I do options expiration. 6th, 5th, 4th. So I think the September 4th trades, you have that listed for OPEX, first Friday in September. I would try and sell the 98 calls on EWJ. I think you'll collect some there. Still bullish the trend. Overall, for a short-term trend, you can buy the 95 October puts and sell, the Sep 4th 94s against it. And that's what I'm thinking for EWJ. When it rests there in about 2 to 3 weeks, and about 95 spot even. That is a buy as it tries to get back to its target of 100. I think this finally breaks, as we said earlier. What was that motivational speaker guy? I forget. The popular dude. Anyway, hopefully your old ceilings are your new floors. I think finally that 100 will start to break in September for EWJ. All right, so that's a major source of pain, 260, and they are hating it today. VWAP 95.89, and it's below that by 27 cents. So further weakness for EWJ. If they can hold 95.90 going to the close, I'll say, they didn't absolutely puke all over. It was somewhat strength into the end of the day. EWJ, a major source of pain, down 2.6% with rising yields. EEM obviously being dragged as friendly fire, down, I think the same figure, worse, down 2.8. We'll see why in a second. South Korea is absolutely just had too much vodka, whatever you want to call it. I was going to say, what are the kids drinking? But the kids don't drink. I was going to say Jägermeister. That's still also, I guess, aging me. EEM, kind of dangerous here. So this is what I'm not loving. So EEM peaked on June 22nd. Obviously, these guys import a lot of oil. South Korea imports oil when it goes up. No likey emerging markets, essentially, and other factors now with rising yields in emerging market bond debt. So EEM peaked at the end of June, essentially 71.5. And I love the test here, the 200 moving average, July 29th. Although it spent a lot of time under the 50 RSI, it's okay. And an ugly Dikembe just rejection for you home gamers just yesterday here at $68. And to me, it looks like EEM is rolling over with that ceiling of $68. It looks like this $68 ceiling has been in place since July 1st. Looks like the second half of the year entered, and this 200-day moving average could start to stabilize and then roll over. Right now, it's going up by about a nickel a day. It's got to hold $61, on this next leg lower, which I believe it's going to take for the next 2 to 3 weeks. It's going to move towards 65 even. I know it doesn't sound nasty, but VWAP on the day, 65.69. They said no, thank you. They're sending that lower. Look for the EEM and emerging market stocks to go lower for the next 2 to 3 weeks, potentially testing a floor as low as $62. 61's got to hold. I do believe $61 does hold. And then you're going to have essentially maybe like what you saw in the S&P, a larger form rectangle being formed, conserving this energy between $71 and $61. And you got that $10 pong, ding, 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 ding. And once it finally breaks out, and hopefully you see the EWJ 100 does break out, and that will be emblematic, resembling a breakout of $68. They're all correlated. Math, puzzle. I do Toy Story puzzles sometimes with my kid. More so, I like doing like those kinds of puzzles here in my head and looking at the charts. All right, let's look at all you crack addicts in South Korea. Talk of the town. Ooh, very similar EEM. Very, very, very similar. Peaked June 18th at $221. So fun to trade, but South Koreans, Anyang giveth, welcome, and it taketh away. My goodness gracious. And look at this beautiful test on July 29th. Just about 3 weeks ago, it had to hold what we were just talking about earlier in emerging markets. It had to hold 136. It did. It got to 143 and then bounced higher. And then ugly Dikembe yesterday at 190, all the way down today to 170.5. VWAP today 173. They said no, thank you, by about $2 actually. So now what for South Korea? Is it the same as we said for Japan and emerging index? Do you want to take a guess? Yeah. So and in terms of money flow, it's been mixed. For South Korea, it's been getting its butt beat versus SPY in the past 2 to 3 weeks, and I believe over the next 2 to 3 weeks here, this is going to gather. So again, yesterday's rejection, if you couldn't see, is at 190. The 20-way exponential is 171.5, literally where it's trading right here, right now. After this, I don't know if I said it, but down 7%. This for an ETF, one of the gainers we'll talk to at the end of the show. Year over year, absolutely crazy. The 200-day moving average at 142. Exactly what we just talked about. When you get your price at the 21-day exponential, that is exactly how you're at the neutrality point. Because all technical analysis, I use 14-day indicators, and that's how you essentially get a 20-day average. So a little, I guess, inside baseball if you want. So for the next 2 to 3 weeks, this I believe will head all the way down to as low as 145. I do think 142 will hold. I think it's going to pong, equating its low of July 29th, almost 143. Trades, I don't even know if you're going to get much for this, but you can sell the 190 Sep fourth, the Iron Maiden trade, Iron Maiden for me. Sep fourth trade, you can sell the 190s. I'm not sure you're going to get paid. May have to go a little 187s calls, and you can always buy the strike against it to sleep at night. So you can buy the 195, something cheaper, so you can sleep at night in case it surges. But I don't think so. Look at ugly candle after the rejection. This looks like it's not ready yet. You need to at least get close with a match with VWAP. And right now it's still $2 off. Those candles, that's an almost internal way of seeing the candles getting cut in half. After such an ugly rejection, it's like you're going up for a 3, Jaylen Brown, and then he makes it. But I was always thinking when he was a Celtic, and Embiid, hopefully, that's when my last Sixer game was Brown scoring on us, and we ended their season, and now he's going to be doing it to them. Amazing. Amazing. Always stay long life. Never kill yourselves. EWY, I guess is the message, right? That's what the kids say. So other trades, you can go out. Again, short term, it's going to go lower. Long term, I'm bullish. But this one, and also could possibly make a massive rectangle in this where it's going to test 2 months, 3 months of energy between 220 and 140. An $80 box, that would be a massive breakout through 260. But I'm not so bullish on that right now. Obviously, we're having master rotation through defensive. That is the call on my favorite South Korea trades short term, as I believe it goes lower for the next 2 to 3 weeks. Not on Young, but the opposite, which would be goodbye. All right, top 3 gainers the past 5 days since we were not here since last Tuesday. So this would be a rolling 5 over 5. So what's been crushing since last Tuesday, energy and the talk of the town, new all-time highs. Take a look at that chart while I finally get a breather. Confirming RSI 272 overbought. These candles are on crack. So I want to take a breather to say. So this is why you never want to doubt the market's energy. It's like that runner on the meme right here. 59 half VWAP on August 10th, 8 days ago. Okay. Bang, up 5% that day. Next day, up 1.2, gathering strength. Next day, 20% up 20 bips. Digestion, literally nothing. 2 days ago, up 1.4, up 1. Today, up 1.4. A beautiful staircase, higher and higher to new all-time highs. Obviously, a ton of price discovery that it's been trying to put in since the end of March, 3 weeks into the war at $63, and that's where we are today. 72 RSI overbought. XLE, not only the gainer of 4% over the past 5 days and bucking that trend today, green every day for the past 11 days. I believe Straz has been massively bullish on this. I think you can still buy this breakout. This rally started around August 7th, so I'm not going to get so August 7th is this candle right here. After that crazy doji, they were legit not sure what to make of it at 57 half that day. That was the hand dealt. The rally began there, 57.5, and we've ran to 63 half. For targets, I do have around 63 even for target. So if you just legit try to buy the breakout. The previous level was 63.46 on March 30th. I would just outright buy the October, believing this confirming RSI. And then you'll get scared if it goes up, 70 bips, and up 35, and then up 15, and then down 50. Oil drops. Something happens in Besant's diary and Oman and their lovers again, and oil drops or something. But for the time being, I just look at charts, not into Besant's predictions of diaries. Trades would be, buying the October 60. I don't want to get, it's a little long in the tooth. I would still probably just give myself in the money 63 strike. And then that's how I would probably chase down. Alternatively, you could sell the 59 or 60 SEP third puts. All right, XLE crushing it, up 4%. ETF leader week over week. By the way, SPY's been down 25, 30 bips week over week to give you the lay of the land in terms of what SPY's done since the all-time highs. Number 2 leader, and obviously as energy, why is energy up in the best in the land? Well, oil is up 3%. Number 2 ETF. I said in that video 7 days ago, I said oil, was it, is it bottom? Is it going to get going? Yeah. I said, yeah, it is. And the chart was right here. View update was 127. And finally, today, eclipse, it got to 132. So it's higher. Now, where do we stand for oil? Still heading, I believe my target is 139, pretty clean. I see it, and then getting rejected pretty cleanly, pretty Dikembe. Rocco's asleep, so I didn't even move for that one. Yes, he did, and he winked. So I think it'll go to 139 trades. You can go and buy those October 139 calls, sell the September 3rd if they're listed, whatever's closest to it. 139's against it, to sleep at night. Alternatively, you can sell the Sep 3rd 124 puts. I don't think I think that's behind you. Target, like I said, 139 of USO. Maybe talks break down, whatever. Look at this chart. Many worse things you can own in oil. You could say AI needs it, whatever. I don't even care. You could say, who cares? January, mid-January, this was a buy here. End of January, like clearly, there's many points to buy oil earlier, and then we could start to spell Iran right here, and that's corresponding with the breakout of 82 when we got overbought. And everyone said, let's ask questions later. Right here, this candle here, $82, 200-day moving average is 103. So that's the background. I gave you the trades on it. USO up 3%, or 60-ish bips a day. Today up 40. Got rejected at 132 today. The important number today is to hold 131 VWAP to see if this is getting tired. But I still do believe in a 139 target in the next 4-ish days. By the end of the week, early to mid next week is the target for that. All right, and then so it's interesting what life giveth and then it taketh away. South Korea is the biggest top 3 loser today. It is a top 3 gainer week over week. So EWY down 7% today. Why are we talking about it right here in this segment? Because it's up 2% week over week due to this massive rally, which let's just focus on that. So we were maybe dogging on earlier due to it being down 7% a little. You got to be careful that this does not roll over this level of 188. That was quite a rejection at 190. It could be spending more time here setting up for a massive rectangle, like I said, and then a massive breakout further. It totally makes sense to me. I don't think the semiconductors and AI memory is done by any silly stretch of the imagination as this moves probably towards 171, as I said, short term, potentially with a floor of 145. Absolutely makes sense to me. South Korea up 2%, landing on this list of top ETFs. So funny. And just because it's have a horrendous vomit candle today. And again, the figure for today, 173.30. If you get to that, I would go under that. Not a win because it's down 7%, horrendous, but not maybe it doesn't go to that 145 floor. Otherwise, I would have more conviction in it doing that over the next 2-ish weeks. Top 3 loser the past 5 days. I've wanted to look at this. KWEB is the biggest loser of any ETF, down nearly 5% in the past 5 days. Look at that chart. So a couple things. Absolute rollover in the 200-day moving average here after now it's eclipsed at 29. It plateaued at $29 and reached its own Dikembe to 26 spot, and now breaking down under 50 RSI. You're really seeing folks leave. That's why I see the going get tough when the tires hit the road. We were talking about what you wanted to see is a little bit at least stabilization here with these moving averages around. Honestly, just keep it easy. 28. It doesn't look like it can. So what we're seeing, or what I'm forecasting here for KWEB, is I don't think the selling's over. This looks like over this week to test 26 even. It's important that happens. Otherwise, I know that sounds like kindergarten. It goes to 25 even. But understand the 52-week low is 23. So we're talking big handles here on a $27 stock, essentially. I feel like that level is going to be very contentious indefinitely, the $27 to $28. So this rollover is emblematic of what we said of EEM, maybe rolling over, right? Let's pull up EEM again. EM not rolling over, instead conserving energy potentially, which is not in terms of risk on. KWEB's been a loser, okay? So one's conserving energy. South Korea's a year-over-year winner. EM's been a winner. K-Web has been an absolute loser. They said no thank you once February came around. No thank you. The vomiting stopped at the end of January at 23 spot. Trades, the 26 even October puts. I think they could pay you, but I do understand. I think think all those words. This week it's going to base file at 26. We're talking about it because it's in this segment as the biggest loser, down about 1% a day. Today doing exactly the same. VWAP 26.81. It's down by about 4 cents. My goodness. This one's going to sell around 26, 27, sell for it. And I think it's going to have a dead cat bounce to 27, 27.5 to 28, and that to come back again. No real trades on this one because I believe in the overall trend, which is lower. I believe it's to base this week. So I don't really want to outright sell the 27 half calls either. But I don't think it's done. You could buy the 26 even October puts. If you're up in your risk management system, 80%, something like that, I would take it off. KWAB, the biggest loser in all the ETF land, down about 5%. Next biggest loser, it's not a ton. I had to really kind of search for these. It's the junior silver miners. Look at this, a major point. Tell me technicals mean nothing. Shout out stock market, as also I'll give said it this morning. January 26th, this was talk of the town with silver, right? And then it's vomited. And it really did all right until this really tough time with the 200 moving average, and it just garnering its strength again in the past 2 weeks. And we're right here, right now at that level again, literally 29 spot. Down 3.5 are the junior silver miners. This was a major point of making money for a lot of traders. This was a year-over-year list. As you could tell, look at the spot here. This was a $17 stock. It went to $40, and there's leverage ETFs on this, of course. I think similar to what we said with the Chinese internet contending with that level, I'm fearful for this level of $30 and the junior silver miners. Yes, that's what concerns me. Does it have enough strength to break out? Yeah, the 200 moving average is going up by 3 cents a day. The RSI has been above 50 for 2 weeks. I like that. You're having big breakdowns. It's tough every time you close under your 200-day, which is 29, 10 even. It starts to roll over and obviously lose strength. It becomes more flaccid, which is also a financial term. So this is pretty high vol. I mean, higher vol. It's a $1 stock or $1 ATR and a $27 name, $28 name. This will move towards 27.5 over the next 2-3 weeks. Trades, I would buy the October 27.5 puts. You can sell something against it to sleep at night always. Alternatively, you could sell the 29.5 September 3rd calls. That looks weak. That's a little juicy. You could probably do 29.5 actually to sell that strike, if not 30. Alrighty. Weak, down 4%, gets you on this list for the second weakest ETF. And then, look at this, one of the goats year over year. This is actually you have to stick around to the end. But this is on the top 3 list of year over year. COPX, you're on the worst of the week list, down 3.5% COPX. That's what happened after you got to Chem Beta at $90. Is it finding a floor here at 85.5? It's literally where we are right here, right now. I'm nitpicking. It's down basically 4%, 3.5% exactly, week over week. Today, down 2%. Yikes. This thing's going to move still lower over the next 10-ish days. Weakness through the end of next week, potentially testing a floor of 70. Honestly, it'll probably drop till about 83.5. It's 21-day exponential moving average. It's $2 from here. VWAP on the day is 85.80. They said no thank you by about 80 cents. So lets me know it's weak, and they're saying no. And that short-term high of 90 looks to be in place for a while. Lets me know I want to kind of sell calls on that going out to about 21 days, where theta starts to bleed exponentially and well for your account. And this likely takes a breather around 83 and then takes another, I want to say, leg lower towards about 79, holds its 200-day moving average, resets around the 50 RSI neutrality point. Makes total sense. Don't forget, copper miners, yes, leading the yearly leading list year over year. This thing peaked like January, end of Jan at 100 even. So very interesting chart for trades. So again, believe in the overall trend. I want to trade counter though, short term. So what do? I could sell those 89 SEP third calls or 90s, whatever's closest, and an expiry too. These aren't going to fit customized like a decal on a really cool low hot rod. Also, alternatively, short term, you could buy those October 83 or 84 puts, as I do think it goes there over the next couple of weeks. If you want to be even spicier, you could buy the 79 October puts. That's probably as spicy as I get. And then, yeah. Okay, top 3 trades of the past 5 days. If you have been short K-Web, long energy, so short Chinese internet, long energy stocks, and short junior silver miners, congratulations, you're absolutely crushing the market. Now, we ranted and raved here. Year-over-year leaders, I alluded to some of them. Number 1, the GOAT of the year. So again, it's probably not of all time, but Goy. It's a Goy. Got Dikembe this week. Unbelievable. So I don't want to kick a dead horse because we talked about it from several angles already, but this is the year-over-year leader, and it peaked more recently than a COPX, which we just looked at. June 18th, this number peaked at 221. As I said, it's short-term. Got Dikembe at 190. I think it'll be in place for the next 2 weeks. As it heads, as I said, to the 21-day, garners a little bit of strength here at 171, and it continues a plunge down towards as low as 145. I think that'll be it, though. And we already suggested trade, so I'm not doing that again. You will get your year-over-year leader on sale. The money flow is not giving me enough to super be scared. I'll let you know if otherwise, but it has been getting its butt kicked, relative strength versus SPY, since about mid-July. So something to keep an eye on. I still love, chasing international beta, if you will, like this, that you can't get easily and replicate it through SPY, although there's DRAM, and maybe that is a reason of this. Folks can buy high nicks directly now. So lots of different reasons potentially, or is it less fervor and, enthusiasm for the AI memory trade? We'll see. I still believe in the overall trend. I would see masterful, horrible, horrendous money flow. Basically, we'd have to close under 142 for several weeks, and I'll say, okay, it's over for that. But right now, why are we talking about it? Because it's the leader year over year, the number up 135%. That tells me more than likely you get to 142, which is why we want to sell those puts. And short term, you can sell also those ceiling, those calls, those strangles, sell 190s. I think this is going to be raining down for a while. I like selling strangles on South Korea. I know it sounds crazy. It's down 7.7. Yes, spicy. Give yourself enough room. So 140, 190. You're essentially going 30 downside, 20 upside. You can also go 30 upside, 200, but it's going to get a lot cheaper because it hasn't even been there since the end of June. EWI, year-over-year leader, Anyang up 135%. My goodness gracious. That is why we're talking about it. Number 2, let's wrap it up. SOX up 112%. Again, this is longer the field than NVIDIA straight up, so less concentration. This one got all-time highs at June 22nd. It's funny, I almost think of all-time highs as being, when I look at it in hindsight, as getting to Dikembe, as that was as good as it got at that moment in time. So that was for this 656. I'm rounding, and I want to give a dog a bone. Beautiful chart. Look at all the time it spent under 50 RSI. Oh man, they're leaving. It's over for semiconductors. Really? That's going to go away. You don't want to own that in 2030. I will, even though overpriced, even though given a premium, it's for a reason. What I will say, I know it's art, science, I take it away. What I will say, it was hard to see in South Korea. This has had ugly money flow, semiconductors, since July 2nd. So look at this candle right here. After this one got Dikembe repeatedly at 590, the candles have looked ugly, and that's typically at 3 o'clock to 4 o'clock. They say, no, thank you. I don't want this. Get me out. This name, we haven't done this straight up in the show, is going to go lower, I believe, in the next 2 to 3 weeks. This was an ugly short-term Dikembe rejection yesterday at 566. I didn't like to see that. And today it's down 6% again. VWAP's 533. They're saying no thank you. Ugly. It's at 527. So they're saying no thank you in a big way to semis today, as I opened the program with. This is, hopefully it was going to garner or gather a little bit more strength at 540 even. the 21-day exponential. Look at it right here. That was an important level for the past 2 weeks. And today it said "bafuera," as my wife says. That's goodbye bye in Spanish. She's Puerto Rican. So it's at 46 RSI here. Very little, time, basically just straddling 50 RSI, truly, for the past 2 weeks. That level equating 540 and then giving up the ghost. This one potentially heads as low as 470, although I think it stays inside of those July 29th lows and gets cute. Markup, of course, doesn't have to do what I forecast or think, but you're going to get the number 2 year-over-year leader on sale. This is where we're talking about, up 112% year-over-year. What are trades? I think that Dikembe serves in place. Ideas you can sell. The 590, that's pretty up there. I would probably do something like the 580 September 3 calls. Sell those. You can buy the next trade against it to go sleep at night. Alternatively, you can buy, it sounds nuts, you can buy for a mad rat dash here the October 470 puts, because this is going lower, I believe. Ugly couple candles here after getting rejected the other day. A clear view up at 560 yesterday. They said no thank you. And my goodness, going lower is the stocks. You'll get this one on sale when it's probably resting about 2 to 3 weeks at about 540 is where I forecast with this one to be. I think it's going to be a buy, but I'm not sure. It looks like you're seeing other masterful rotations. I do want to see money flow improve as it bases on the way down. Right now, I'm not seeing it. Semis, of course, a very important part for the market. Looks like it's going to go lower, and a driver on the market not being able to go higher over the next 2 weeks. And lastly, let's get out of here. Number 3, COPEX. This is what crushed August from last year to this August, okay? Not year to day. I don't really care about that. It's not enough sample size for me. Yes, 8 months versus 12. I like 12 better. COPEX, year-over-year leader, number 3. So if you're long South Korea, yes, stocks has a lot of correlation with it as well. You don't need both. Plus COPEX, copper miners, you need that for that. You've been crushing it in 2020, end of 25, and all of 2026, essentially. And we already talked about COPEX and the trades I like for that. COPEX being hit this week. You'll get all these on sale. Korea, semis, and COPEX. The question is, will you want them? Like Buffett says, when something goes to the level, will you want to buy? I think it was Buffett. And that's where, wealth is made. I think they likely will be when the time comes. Awesome. Great show and program. Probably back Thursday for the next one.